What's going on, everyone? The market set the tone today as 70% of stocks in the S&P 500 closed up in the green. And looking at the market tomorrow, we only have one more day left to end this crazy week. So let's end it on a great note. In today's video, we're going to talk about how there are $5.1 trillion worth of options and other securities set to expire tomorrow and what this will mean for the market going forward. On top of that, we're going to look at some historical data about what the market tends to do around rate cut situations like we're in now. And we're even going to look at some other historical data that shows what specific aspects of the market tends to do the best around rate cuts. On top of that, towards the end of today's video, we have a massive $3.3 million big money trade. So stick with us all the way until the end. And besides that, Tom, let's end this week on a great note.
Yeah, Mike, the heat map was fantastic. Looking at some of the stocks that really powered the market today, I mean, big tech, they did not disappoint today, that's for sure. I will say this, though, a lot of the movement did come in pre-market, but for a lot of the tech stocks like Apple, Nvidia, and others, they did have some pretty good price action after the market opened, too. For anybody who doesn't know, the SPY made new all-time highs today, following the all-time high that was made yesterday. So that was pretty fire. The SPY got all the way up to like the 573 resistance before finally pulling back a bit there into market close. But Mike, it was a fantastic day for the market today. Hopefully we can keep up with this good price action tomorrow. But I will say, I know that there's a lot of options and futures and etc. expiring.
Exactly. So let's talk more about that. So essentially tomorrow is what's called a triple witching day. And essentially all that means is that there's going to be a whole lot of money moving around and we have a lot of options and futures set to expire. As we can see on this little graphic right here, it breaks it down into each category. But the main thing you need to know is that there's going to be a lot of money moving around the market tomorrow. And some people like to make this out as it's going to be like some world-changing event, when in reality, sometimes it can bring on a little bit extra craziness, but it's not all that crazy of an event. But either way, we wanted to bring this up so, everyone can stay in the loop and just be aware that we will probably see a lot of big orders tomorrow. Sometimes this translates into extra volatility, sometimes it doesn't. But one thing that you'll especially want to pay attention to is gold. So we've been talking about gold prices in a bullish way for too long now, Tom, and the rate cuts have definitely helped gold, historically speaking, quite a bit. Essentially what we can see on this graphic is how gold has reacted to rate cuts in the past. We could see that basically every single time that we saw like a rate cut like we're seeing now, gold has reacted in a positive way. The only true exception to this was in 1998, but even in that scenario, gold had a great move towards, I guess you could say, the end of the year. So the main takeaway is that gold is a big beneficiary of rate cuts, and this is something that a lot of people know about, and I think that's part of the reason why we keep seeing just such great price action and, new highs out of GLD and other gold-related areas of the market.
Yeah, gold was pretty awesome today. I know that GLD wasn't quite able to break above the high from yesterday, but gold did have that good move this morning. In pre-market, it held right around those pre-market highs pretty much all day, looking pretty good into tomorrow. There is a big resistance right around 240, but I love the way that gold's setting up in the short term, Mike. Whenever you go to the daily chart, you can see a lot of fantastic price action, and ever since we really broke out of like that 230 to 233 range, we've seen a pretty good move here out of gold. So I'm definitely going to be watching for a 240 break tomorrow and the next couple days on gold. And even silver moved pretty well. It was up 3.1% today, which is pretty good. Again, it didn't really break above the high from yesterday, but I actually kind of like that, Mike, because heading into tomorrow, that'll be a really nice level to watch for a breakout.
Absolutely. So like SLV, GLD, and you could even say like gold mining stocks as well, which like GD GDX is a great ETF for are definitely going to be worth keeping on your radar going forward. I know we've been talking about these so much over the past year, and people have done very, very well on them, but keep in mind that gold is not like some big tech stock that, jumps up and down by 10% every day. It's more of a slower moving asset that people have resorted to for since the beginning of time, right? You could put it that way. And, when we have rates getting cut, it causes a lot of people to, I guess you could say, move their money. And a lot of times gold is a big beneficiary of that. For example, you have people who are earning, or who were once earning, let's say 5.5% interest, and now that's getting cut down by, 0.5%. And people are like, this doesn't necessarily feel as great as it used to, and then they shift over into gold for multiple other reasons. But either way, GLD and these other areas of the market related to it will be very important to watch going forward.
Yeah, Mike, and whenever we talk about gold and just rate cuts in general, I will say I know that a lot of people out there get pretty freaked out whenever you hear rate hikes, right? Now we're starting to cut rates. The market's reacting very well to it. I'm very curious, Mike, if we can see a good continuation out of gold, out of the overall market over the next couple days. It has been a little bit strange, Mike. Gold has actually been popping up with the market here in the short term, which is a bit of a weird thing to say, right? A lot of people think that, gold is just only this safe haven asset. I will say, though, the way that the economy is setting up is just presenting it to be an amazing asset here in the short term, Mike. So I'm definitely going to keep watching that. And whenever we talk about rate cuts, Mike, I know that we looked at gold going forward into the future a little bit, how it reacts to rate cuts. Here's how the normal market, or I will say the S&P 500, reacts to rate cuts, right? I will say, though, this is a pretty mixed chart. It's not as defined as gold is.
Exactly. At least when you look at it in a very short-term sense. Like we covered earlier in the week, when we look at the S&P 500's seasonality when it comes to rate cuts, you could see the first 2 months or so after the rate cut happens is normally pretty choppy, and it's just pretty mixed, the first 2 to 3 months. But once we get past that point is where things become much more defined, and when the market really starts to pick up some serious momentum. And basically, with that information in mind, we can see when we go back to the data you were just looking at, once we get past that 3-month mark, we can see the market tends to do either very, very well or absolutely horribly. So the good news is that it's it's in a momentum filled way, and it's significant movement, because if the market didn't really move at all, that would suck and it wouldn't really present that many opportunities. But given that we know the move will be big, it's just more so waiting for a sense of direction, tells us that over these next couple of months, you have to expect more I guess you could say choppy movement, but you have to be willing to adapt quicker. As we get closer to the end of the year is when we'll get a much more clearly defined idea of how the economy is holding up, because if it's holding up good, then rate cuts can be like a turbo booster for the stock market. At the same time, if we do enter a real recession and the economy starts to cave in, that's when we know, all right, you better buckle up because it's going to be a rough ride. But either way, we wanted to showcase this data because it's pretty important, considering we just got a big rate cut yesterday.
Yeah, exactly. And you know what, Mike? In 2 months, guess what's happening? The election. So we're going to have a lot. That's still looming over the market too. That's going to bring in a lot of volatility as that starts to happen. And it's interesting how after these cut cycles start, a couple months later, we start to get that movement. I thought that chart we showed earlier in the week and the one that we showed again here is very interesting, because it's showing that once you get to that 2-month mark, we usually start to see a pretty good direction. And I'm really glad also that on this chart here that it really shows the recession years, because as you can see, the years where the economy does enter a recession or was already in one is where we see, I would say, the biggest downturns in the short term. And a lot of people argue that we're going to be having one soon. So I don't know, maybe the Federal Reserve can stop it by cutting rates quick. But at the end of the day, Mike, I found this to be an extremely interesting chart, especially with the elections coming up too.
No doubt. So I guess looking more at the market for tomorrow, as we look at SPY, like you said earlier in today's episode, it broke past its record high. With that being said, what are the key levels to watch with this one in both directions for tomorrow?
Yeah, there was a lot of choppiness and just chop in general with SPY today. There's the all-time high now, right around 573. If we break above that, we'll be in no man's land. You could maybe target 574, 575. A lot of times the whole dollar levels are better. To the downside here, or still overhead, I guess. I still am watching 572. There was a little bit of bounces there today. As far as support, I was watching 571. The market closed just under that, so I'll be watching that situation tomorrow morning. And then I also have a support right around 569.50. So that's what I'm watching on the SPY. If we start breaking under there, I think we could see a more significant sell-off. I'm watching 568 below that, 566, and then 565 with 563 down there. I have a lot of levels on the chart. I'll zoom out a little bit if you guys want to go ahead and screenshot it. Feel free, but I will say with the chop today, Mike, I am a little bit worried about this little channel the SPY's in right now.
Yeah, for sure. And then like as we let's say as we look at the heat map, we can see big tech stocks especially did very well. And this is definitely worth keeping in mind because we are in that 2-week span of the year that is horrible for the market historically speaking. But what's, worth especially keeping in mind is that you have to be willing to adapt. Like as we look at the market, money can be made in both directions. Like you could be super bullish, like let's say like over the next couple of months, but it still works to your benefit to be willing to take bearish positions in the short term if the opportunities present themselves. And the same thing goes on the other side. You have to be willing to adapt, especially in this market, because sentiment is constantly changing and there's just a lot happening, not only with the stock market right now, but just with the world in general. So being willing to adapt is definitely a good trait to have right now, and don't be scared to trade both directions. But looking more into tomorrow, we have a pretty clear schedule, Tom, not only with the economic schedule, but also earnings.
Yeah, there's pretty much nothing. There's a Harker Fed speech tomorrow. I guess if you want to watch that at 2 p.m. Eastern time. Personally, I doubt anything will be as crazy as what Powell said earlier in the week. And then earnings is pretty dead now. There is TBN, I guess, tomorrow before open. I'm sure there's a couple others maybe as well. But at the end of the day, Mike, we're pretty free and clear to just see what the market does, right? These big tech stocks are really what's going to be in focus. Apple's at a key 230 resistance. We had Tesla rip up today in a great way, up 7%. Nvidia's moving. So if this price action continues tomorrow, I think that's really the main thing to look out for.
Awesome. All right, well, let's get right into some setups and predictions then. A stock I'm watching very closely right now is BABA, and it is to the upside. So Chinese stocks have been crushing it in the short term, and Alibaba is one of many of them, but its price action has been great. It's up nearly 5% on the day. It had a great gap up, and it's still pretty oversold in the grand scheme of things. Essentially, BABA has been taken to the woodshed over the past couple of years, and it is still in the process of rebounding. It is now just starting to get some of its old bullish momentum back, and that's a good thing, as Alibaba and other stocks like it don't really move with the overall S&P 500. They kind of do their own thing, which is a great trait to have in this market because, as we know, the sentiment with the S&P 500 is changing every day. So when you have an area of the market that has the potential to move in a momentum-filled way while also just moving in an independent way, that is, it's a good source of opportunity, we can say. So with that being said, BABA is definitely on my bullish radar going forward. I would love to see a potential retest of the $90 resistance overhead.
Yeah, that 90 resistance is pretty huge. Like if you go to a daily or an hourly chart, that was the peak from back in May of this year. So definitely have that on watch here for tomorrow. With my first play, Mike, I'm looking at PayPal. PayPal had a great day. It was up 6%. I'm really glad to see PayPal continuing up with this bullish price action. It actually just broke above a major resistance. I will say this stock is mainly a momentum trade. If we do end up breaking the high of day today, watch out for $80 tomorrow. That might be a pretty good whole dollar level and just a nice level to target if we do get the breakout. But the high of day today was right around 78.23. So I guess you could say like 78.25 for a break tomorrow.
All right, sounds good. Another stock I'm watching pretty closely is Netflix, and it is to the downside. So I've been hitting on this one quite a bit in the short term, and it is back to its key resistance area, right around like $710 a share, and you could see all the way up to $715. Basically, this stock has a heavy resistance level overhead, and it is currently in the process of testing that. Basically, I'm looking for a continued rejection off this area, and then an eventual retest of support, not only at $700 a share, but then even back down to $680. I think this is a nice setup because it is relatively weak compared to other big tech stocks, and it offers a opportunity that I guess you could say will move like independent to other setups in the market right now. For example, we have a lot of big tech stocks like Apple, Nvidia, Meta, Tesla, and others that are ripping to the upside, and that's awesome. But if you're only looking at bullish setups, if the market itself rejects, then a lot of those setups are going to degrade pretty quickly. So Netflix is like one of those setups that, I guess you could say is a little bit different than what's currently popular.
Yeah, I like it. If we do see a rejection tomorrow out of Netflix, that'll be an interesting one to keep an eye on. I'll definitely be watching that $700 support tomorrow again. It bounced pretty close to there this morning and ended up holding, but I'll have it on the radar tomorrow. With my next play, I'm looking at another China stock, which is NIO or NIO. NIO was up 7.57% today. It's right around the 540 resistance, so if we're able to break above and see a clear move past 540 tomorrow, I'm going to keep watching NIO to the upside. This can be a pretty volatile stock, though. The average percent rise is 2.6%. Same thing with the average percent fall. So just keep that in mind. But on the daily, this stock had been consolidating for like around 10 days or so. And I'm really glad to see some good bullish price action today. And I'm just looking for a nice test of resistance here. If it does end up breaking resistance, fantastic, right? But I will be targeting resistance first.
Sounds great, and the recent bullish momentum with Chinese stocks definitely helps set up like NIO. So good stuff there, and I'll also keep it on my radar. But besides that, let's jump right into today's momentum plays. And with the first one, we have Walmart to the downside.
Yeah, we had a big money play on Walmart back on Tuesday, and it had a pretty negative move today once again. If it ends up re-breaking back under 77.80, then watch it to the downside.
All right, with the next one, we have Shopify to the upside.
Yeah, SHOP, pretty interesting. They're right around 79.50, so if they break 79.50, watch for a breakout. I will be watching $80 overhead as well. If we do see like a pre-market pop, then make $80 break.
All right, and now with the last one, we have Apple for both directions.
Yeah, Apple's pretty crazy right now. It had a great move back to the upside today. As we know, Apple had taken a bit of a hit in the short term. I know a lot of people were getting kind of worried about it. It did pop up very nicely today back to the top of the trend. If we do see a break of this 230 resistance, I'll be watching it to the upside. If it ends up pulling back under 225, then I will watch it back down. But Mike, 230 is major. You can see on the Bookmap here, towards the end of the day today, there was like 285,000 shares or so stacked up at 230. So that is going to be a major level to watch tomorrow. It's also a nice whole dollar level. And I think with the high of day being so close to it today, if we do break it tomorrow, it might pop up on a bunch of scanners and etc. So if Apple breaks 230, that's really the main level to watch tomorrow.
285,000 shares. That's a ton. So yeah, definitely keep a close eye on that 230 level. This is a Bookmap chart. If you guys haven't used Bookmap yet, you're missing out. Basically, it shows you exactly where the buyers and sellers are lined up, and now's a great time to have it on your side, especially given all of the craziness we're seeing in the market. If you want to try it out, you'll save using our link in the description and the comments down below. But besides that, let's jump right into today's $3.34 million big money trade, and we are looking at ticker symbol PDD. So today the big money put a little bit over $3.34 million into the 105 strike call options that expire on November 15th of 2024. Looking at this setup, it has taken quite the beating over the short term, you can say, but it is starting to gain some nice upside momentum again. PDD is a Chinese stock, so of course this has its own unique risks to it, but also comes with some nice added reward as well. But looking at this setup, I really like to see the newfound bullish momentum that Chinese stocks are starting to gain. At the same time, PDD is holding the $90 support level in a pretty strong way, and it has resistance at $110 and $120. So it definitely makes for a nice positively skewed reward risk setup. It's a pretty heavy big money trade. The options aren't too far out of the money, but they're far enough out of the money to make for like a nice I guess you could say skewed reward potential. And at the same time, there's a fair amount of time left to these options. So with everything being said, I'm pretty excited to see how this one does.
Yeah, and with these big money plays, PDD has enough time, and with China stocks, as we know, they like to gap up and down quite a bit. So, if you give it enough time, we might start to see some pretty good gaps to the upside with this stock and with these China stocks in general, kind of like what we saw this morning, but sometimes even more exponential on some of them, right? But yeah, I like this big money play quite a bit, Mike. It seems like there's definitely some money flowing back into these China stocks, and PDD coming up off this recent dip could end up being a pretty enticing play to get into, right? It's not like BABA, for example, which is, just now breaking resistance and kind of breaking out. With PDD, it's more of like a dip buy right now. So I find that just to be kind of interesting. And of course, there's also a huge gap to fill on the chart. And I do like that 110 target you mentioned quite a bit in the short term.
Yeah, so definitely keep a close eye on this one going forward. These stocks move quite a bit in both directions, which is definitely good for a setup like this one. So definitely keep it on your radar. But heading into tomorrow, let's remember to adapt, follow the money, and trade with smart, sustainable, long-term oriented trading habits. It's awesome to see the market ripping past all-time highs, but if you don't position yourself in a good way, then there's no way to actually capitalize on those opportunities. As always, make sure to have stop losses for every single setup that you follow, and by doing this, it essentially makes it so you could trade more based off of logic rather than emotion, and you could help keep your losing trades as small as possible while letting your winning trades run. If you want to learn more about some smart, long-term oriented trading habits to have, definitely join the StockedUp Discord server and check out the Key Lessons channel. This is completely for free, and you could gain a lot of knowledge that can definitely benefit you quite a bit. The link to do this will be in the description, so consider joining and checking that out. But while we're in the Discord, Tom, let's give a giant shout out to today's member of the day, Easy Peasy in the StockedUp trading floor. They said the theta trades paid off today, and the SM bot just added a little bit more juice. So awesome screenshot there, and keep on crushing it. It's awesome to see posts like this one, and I have a feeling we're set for a very exciting next couple weeks, Tom. But huge shout out to you, Easy Peasy, and keep on rolling. Again, if you guys haven't tried out a Bookmap yet, definitely check it out. It's going to be that first link in the description in the comments down below. It basically is X-ray vision for the stock market, which is it's a very useful time to have the X-ray vision. Again, there's a lot of crazy stuff going on in the market right now. Besides that, thank you all so much for watching, and let's end the week on a green note.